No, he should do it.
He will do it. He is a seasoned wealth management professional, so I am sure that he will find a lot of interesting stuff for the learning. So good afternoon once again to all.
Good afternoon.
And good afternoon, sir.
Good afternoon.
Thank you for inviting me for this seminar. It's a privilege to come here and address this gathering. Thank you, Motilal Oswal, for this wonderful event. Okay, I'll just start my presentation. But before that, I guess we all had our lunch, right? We are no longer hungry. Am I right?
Hungry to grow our business.
Yes, we are hungry for knowledge. We are all here to gather more knowledge, to share our knowledge. Knowledge is something which we share and we gain more. So that's why we are all here. And CFP is the right direction for all of us as an advisor. So we are going to discuss about how CFP would help us in our career as a professional, or if you're based out of some organization. First, about myself. I'm a graduate from St. Xavier's College, Calcutta. I've been associated with this industry for the last 18 years across 3 organizations. At present, I'm working with ICICI Securities in Chennai in the private wealth management segment and as an AVP. And primarily before this, I was more or less with equity stock broking. So if you say my career started with equity stock broking, Calcutta is known for stockbrokers. A lot of equity speculation and other financial activities happen out of that city. It's a wonderful city. A big milestone in my professional career has been qualifying as a CFP. I wish to share this experience to my friends and also with my colleagues of the CFP, who are CFPs now. So how did it all begin for me? How did I get into CFP? You know, that's a big story. This fairy tale, you can say, this fairy tale started in 2012. So I was egged on by my organization at that point of time. You know, because I was confused. Okay. So for a moment, you know, everyone goes through this mid-career crisis. You know, you've been spending a lot of time with a particular industry. Suddenly, the industry goes into a slowdown. You don't know whether you are stuck here. You have made the right direction in terms of your career. Where is it taking to? And 2010, 2009, those period of time was quite, you know, challenging for many of us. You know, as a where is the career headed to? So that point of time, I was working with Religare Macquarie and Mr. Rohit Bhutta, who happened to be the managing director of the organization at that point of time, egged me to take up this course, CFP, which was quite new to me. I've never heard about CFP before that. And what is this advisory all about? We all talk about mutual funds. Ye le lo, wo le lo. As jisko acha lagta hai, Infosys acha hai. This, you know, this is the kind of jargon or the, you know, advices which we had already given to all our clients. So what is the CFP all about? So I was a bit confused. I don't know where to start. So luckily for me, I happened to get to know about Mr. Keyur Shah. And first I contacted him over phone. And I thought, I mean, this gentleman is providing some sense to this whatever work I am doing here. So to achieve any task, you need a mentor. You know, knowledge is already there. Everyone has knowledge. You have knowledge about, you have experience about this industry. But this mentor is the person who guides you through to take you to the next level, to achieve what you always wanted. So I happened to meet Mr. Keyur Shah on his only visit to Chennai. So that was in 2012, and he held a 2-day workshop. And believe me, that 2 days changed a lot of things in my life. In just 2 days, he guided me to crack the exam in the next 3 weeks, which was phenomenal. I couldn't dream about it a month back. I would be a CFP certified within a month's time. So that is the amount of focus, that's the amount of guidance that Mr. Keyur Shah had given me. And I don't think so there's anybody who had guided me to that extent in such a small period of time. And I thank Mr. Keyur Shah for this. It's been amazing for me as an individual to get into this segment. Obviously the exam was over. I took the Challenger, that's the 5th module. It was over in 3 weeks time. I just happened to qualify. And what happened next? I was the first guy to qualify from my organization. There was a lot of appreciation from the organization side. Clients also, it's something, when you meet a new client, whenever you do a business, you have a sale call. Probably some of you are aware, be it an interview or a new client call, you hardly get 7 seconds to impress. That's the time a client takes or a person takes to judge a person, whether he is going to do the job for me, whether I'm going to go along with him. And this 7 seconds is a very short period of time. So how do you impress the client on the very first second? CFP actually takes 15 minutes out of that, which you otherwise, you had to sell yourself. What I can do as an advisor. You just present a card with a CFP certification. That is a big thing. So CFP actually, markets your, what you can do for the client as an advisor, which otherwise in the whole, if you take the other universe, it's basically faceless without a CFP certification. So if you want to be an advisor in this field, you have to have a CFP certification. So, yes, as I was mentioning, perception matters, and CFP goes a long way into all this. So, as I mentioned, I am working for an organization which is into financial products. I am not there as a pure advisor, so I wouldn't be talking much as an advisor or a professional advisor being a CFP. So I'll just take you through my experience, how CFP can be useful even to HNIs. Some people were having a doubt whether we cater to a particular segment of people or whether we ignore a larger picture. I feel it is not like that. We all have the universe is large. We have a wide variety of products. The rules of the games are changing, When we talk about rules of the game, regulator is bringing in new regulations. You have newer kind of products. We didn't talk about derivatives probably 15 years back, 20 years back. Today we have derivatives which is probably X times bigger than the cash market segment. So change is constant. And with more and more people becoming millionaires in India, you need to address that particular segment also. Me being a part of the wealth management, my focus may not be, to create a wealth for the client. Obviously, there are clients who seek advice to, increase their wealth. But as a CFP, you can also be a better equipped person, a better equipped financial advisor to ring fence a person's wealth. To create or understand the nuances of the market, to understand how exactly you can allocate the assets in such a way which is commensurate to his profile. You can talk about estate planning, you can talk about a lot of other things which you otherwise may not talk to a person who is just trying to build up his wealth. So CFP has been useful for me to understand a lot of subjects like, you can call it aspirational products. So when we talk about products, when we talk to clients on building wealth or allocating assets. We talk about debt, which is primary thing. We talk about insurance. We talk about equity. But people who have already gone into all these phases, their aspirations are more. They want to have a lot more in terms of, they hear about a lot of products, they travel abroad, they travel to various advisors or bankers who introduce them to products which are already there abroad and are making their entry into India. So we can call this an aspirational product. So you need to be equipped yourself to understand these products and also be ready to advise to clients, be it an HNI client. So when we talk about aspirational product, I'm not going to talk in detail about this product, just for your understanding, which are more popular in India. We have something called the structured products. We have something called alternative investment funds, and these are basically products which are sought out by HNIs or institutions in the current scenario. This is over and above the debt and equity. So when we talk about structured products are a combination of traditional investments, that's equity, currencies, commodities, and one or more derivatives that is structured into one securitized instrument. The customization to one's risk profile, I have a risk profile well. So these structures are more or less customized. It's not vanilla, which is available across off the shelf. So these are customized to one's risk profile, and expectations is unmatched in otherwise a singular asset class. It provides attractive features like capital protection, yield enhancements, participation, leverage, and a combination of all the above. Structured products form a key feature in international financial markets, be it an institution or a provident fund, which is coming to India. They want to have the returns, but at the same time want to protect their downside in the markets. So especially if you are a growing economy and all, they take a lot of risk aversion methodology, or what you say. And structured products are also becoming the preferred medium of raising funds by NBFCs. So what is the structured product? I'll just reiterate again. It's a combination of multiple products, wherein it can be an equity linked structure, wherein the payoff is linked to equity, but you have the protection of a debt. So it's been there for some time now, since about 2008. It's preferred by HNIs. What are the risks involved in a structured product? So you basically, the first and foremost risk. So when you advise to client, you should understand the risk of the product. The risk of the product in this is, the first and foremost is credit risk. Because the issuer who is issuing or borrowing the money and issuing the debenture, everything depends on whether he is going to survive till the end of the tenure of the product. So the credit risk is one of the foremost risks. Then you have the market risk. These structures are not that liquid. So you have a liquidity risk, an underlying asset risk, that is what happens to the equity markets kind of. You have the regulatory risk, and these structured products do not have rights on the underlying asset. That means even if it's an equity linked structure, you don't get the benefits of the right issue or a dividend or something like that, based on which these structures are issued. So I just conclude on the structured product side. How to choose a structured product for risk averse people who you already have an equity portfolio. The market is at 8,000. I don't want a downside, but I want an upside on the market. So you can suggest a capital protected one, wherein it's linked to the Nifty. If the Nifty moves down, your investment is protected. But if it moves up, you still get a good return, which is linked to the market. For moderate risk appetite, you have those participating structures. What do you mean by participating? It means that you have a fixed coupon, and also you have a participation on the equity. That is, if the market moves up from here, you at least get a 7% fixed coupon plus a 50% return on the equity, whatever the market moves up at the end of the tenure. So you have a participation plus fixed coupon. So in one way, he is at least assured of a FD return, Whereas if the market moves up, he gets a FD plus kind of return. And then you have those high risk appetite leverage product. There have been some fancy structures which have been created wherein if the market moves up between 19 to 23%, you get a 700% return on the market. Which is impossible in an otherwise a normal mutual fund or a PMS, 7x return. And that in a period of 2.5, 3 years. Taxation is something which changes over a period of time. At present, every structure is, basically a debenture. You have a debenture taxation, so it's a long-term capital gain beyond 12 months, provided it's listed. So we come to another class of aspirational investment, that is alternative investment funds. We had a lot of write-ups in the magazines and newspapers ever since in this union budget. It was announced that FIIs would be allowed to invest in the AIF category. So what is this AIF? AIF is an investment vehicle to pool in funds for investments, primarily for private equity, real estate and hedge funds, etc. All these are basically high risk categories. So SEBI has mandated that anybody who is investing into AIFs should have a minimum 1 crore ticket size, wherein the retail is possibly kept out for the, being a very higher ticket size. So an AIF should be of minimum 20 crores and the minimum investment per investor should be 1 crore. The sponsor should at least contribute 2.5% of the fund. And you cannot have more than 1,000 investors in this fund at any point of time. So there are 3 categories of AIF. Category 1 is basically a positive spillover, any kind of business or investment into a business which is basically a kind of startup, which has a positive spillover on the economy and gets a concession from the regulator of the government. It comes under category 1. Category 2 includes private equity and debt funds. These cannot raise debt for investment purposes but can do so to meet the operational requirements. Category 3 includes funds which are traded for the short-term gains with a leverage. So category 1 and 2, you have it's a pass-through vehicle wherein taxation is at the hands of the investor and probably the fund house deducts a TDS of around 10%. So that's on the taxation front. Both are uniquely positioned to attract HNI investments, knowing their risk profile and their appetite to invest into newer ventures. So where do I go from here? I'll just conclude my presentation. So as a CFP professional, what does a client get from you? A mature and understanding financial doctor. I would call it a doctor because I think sometime back also one of the earlier gentlemen was presenting, we are actually, we have a very fiduciary relationship on one hand, and also the client trusts on us as a certified financial planner. So an advisor has to ring fence the investments from the vagaries of the market. We are a guardian of their wealth who foresees the risk involved a moment faster than the rest of the distributor universe. A professional who is bound by integrity and passion to succeed in the financial services advisory. Ethics in business is of paramount importance, and CFP certification emphasizes the virtues associated with a good advisor. So CFP basically stands for, you have to be very clear in your thought process. It's clarity, foresight and process. We have built these 3 pillars into the financial advisory business. Clarity of thought in addressing personal financial issues, foresight to understand risk and mitigate it with existing tools, processes to leverage the existing asset to a wealthy lifestyle. We are supposed to be ethical and recognized in over 24 countries. So CFP certification holds a lot of promise for the future for all of us. My best wishes to anybody who is going to enroll and give the exam in the near future. I wish them all the best. Don't lose your focus and become a CFP as soon as possible. Thank you.
quick question.
Come again on taxation. What is the taxation on AIF?
AIF category 1 and 2, you have a pass-through, both are pass-through vehicles. So the onus of paying tax is on the hands of the investor. So there will be a TDS of about 10% deducted by the fund house. The balance tax have to be paid depending on the nature of the investment, which will be by the investor.
Third one is tax free.
Third one is fully taxed, 30% as of now.
Can you put some
Third one is basically into leverage, so it's kind of business income, so it will be taxed fully.
regarding structured product? Is there any minimum entry like AEF there is 1 crore?
Structured product, if it is coming through a PMS platform, obviously then 25 lakhs.
Okay. Then otherwise is normal mutual fund.
It all depends on the issuer, on which platform is bringing your that product.
So after CFP, if the one does not want to take up the advisory but wants to get into a job, what kind of opportunities are there?
As of now, I think there are 24 charter, no, how many charter members? 50 odd charter members associated with FPSB. Everybody is looking out for people who are from this CFP background, and so you have a good promise on that front.
Well, is it a well-meaning, good-paying job, or what kind of a job profile you can expect?
No, what is the salary you are expecting?
No.
Then he will then
It's not for us.
Our professional.
If I need to tell my son or my nephew or somebody who wants to write this exam, what can I expect when they pass out?
So first we'll thank Rajesh ji.
Thank you very much.
Please be seated. So it is a good question. I answer in a different way. Today, if someone does a graduation, I'm talking about BCom.
BCom and then followed by this course.
So today, if someone complete the BCom and start his or her career, average salary one can expect starting is 10,000. I'm saying average salary in private sector. I'm not talking about government sector, but average salary would be 10,000 per month, and then it will be growing between 7 to 8% per annum. Now, if person is qualified, well qualified, then he or she can go for some qualification like CS, CA, etc. He can start a 40,000 or 50,000 rupees per month, and it would be increasing maybe 15-20% per annum. But you know that today CA, CS or maybe any professional qualification has a 1% result only. So now 99% or 95% commerce graduate may not eligible to complete the CA. Na? So they, instead of starting a salary of 10,000, let invest another 6 to 12 months with graduation or after graduation, complete the CFP. So instead of 10,000, I am starting my salary at 20,000. And instead of 7 to 8% growth, I can expect at least 10% growth. So it is basically a certification is placed between the graduation and the CA. Okay. So that's how if someone is eligible for CA, go for CA. But if he is not eligible for CA and he is looking for some alternative career path, so then CFP will help to start the good career in banking and financial service sector. Okay. So now we'll go ahead. We have one more senior speaker, Mr. Girish Panikar. He is a senior training professional, and he'll light about the challenges in the life insurance industry. We know that the life insurance industry is one of the biggest industry in our country, but life insurance industry is going through a lot of challenges like attrition rate of advisor or agent. There is a lot of mis-selling in life insurance industry. So he'll be talking about the next 15 minutes about the journey for the life insurance industry.
Good afternoon. Actually,